Hello and good morning, listeners. A pleasant day to begin Almus Market Mornings with Shikhar Garg, and let's dive into the updates for the day. After a slew of central bank meetings last week, we have had last few in action today and going forward. Bank of Japan released their policy update moments ago, and interestingly, one of the policy members who was mentioning about the need to start taking into consideration uh, rising inflation. Now, BOJ was found mentioning about the need or the increased bond buying while reviewing the operations of yield curve control, for which the initial reaction was a stronger yield. Yields also rose while possible demand increase from China had put oil back on its track. Even Russian ruble fell to a fresh 6 to 7 month low against the dollar, currently trading at 67.72. So, JK, a few updates from the other nations and a lot many things happening around yield. What's your thoughts? What's going on?
Good morning, Shikhar. Yeah, definitely. I think yen has been in the news in the last few minutes, and as they released the monetary policy, uh, I think one of the two of the updates in the policy is what led to a massive movement in the yen. I think it's already 3% up on the day, 137.50 to 133 plus right now. The statements were one is they will review operation of yield curve control. Uh, Japan's market function has declined. Yes, we know that recently hard unit rates had been taking place at these levels because market was expecting the yields to rise, but no one was ready to buy the bonds. It was only Japan central bank that was buying. Other more important announcement was BOJ to expand band around its 10-year yield target to 0.5%, up and down each from 0.25%. The down does not have any meaning. I think it's the upside that the market is looking at because the inflation is higher. So I think that's what is reflected in the yen movement as well. So we have seen the big strength in the yen, and of course that is also telling upon the other currencies which have actually strengthened as well. So if you take into account the in Japan, the inflation has been going up, and the market has been actually surprised that they have not reacted to it. In fact, the public anger has increased over inflation as wages have not also increased in step. There's been no fight against inflation by the Bank of Japan or the government, and that's really hit the it starting to hit the economy as and the consumption as well. According to one newspaper report, approval rating for the current Kishida administration is only 25%, down from 31% a month ago. And it seems that this is due to the government's poor handling of inflation rather than inability to encourage companies to raise wages. So when political stakes are high, we normally see resistance to action being broken, and that's what is probably starting to reflect in their announcements today. JGB 10 years have been holding around 0.25. I'm sure it's going to break higher now, and a lot of position unwinding will happen, leading to losses on the longs in the Japanese bonds, particularly for the Bank of Japan, who is the highest holder of the bonds. We also had important development on the German data business sentiment published by IFO Institute yesterday, climbing further as we end the year. Business climate index rose to 88.6 from a revised reading of 86.4 in November and compared to forecast of 87.4. And this is the latest in a series of good economic data from Germany. And at the end of what has once again been a challenging year for German economy, hope has returned that the economy might even avoid a winter recession, or at least hope that it will only be a mild one. However, the inflation still remains high, and winter has turned severe, and there is stress on the gas storage as consumption rises. It's too early to say that the economy has turned the corner. While the rate hikes might have supported the euro, the persistence of high cost of living and re-emergence of energy challenges can keep its gains muted. One thing that we observe in December every year is that the large positions taken during the year see some sharp reversals during the month, and that has actually happened a bit early for euro and yen. And what we have seen yesterday is a similar thing playing out in the Russian ruble, and we all know Russian ruble had strengthened massively after the Ukraine war against market expecting it to fall, and this was mainly because of massive increase in their exports and the restrictions on outward remittances, etc. But now the Russian currency has weakened more than 7% yesterday, and in fact, more than 16% since the middle of November. The impact of recent oil price cap by NATO, as well as the European sanctions against Russian exports, is bound to affect their revenues. And it's only natural that it is showing up in the prices now. So that I think this, at least from the technical chart, it looks like we can see more of ruble weakness in the coming days ahead. On the market actions, we saw more losses for stocks yesterday as investors tried to find little reasons to go long stocks, with the Fed hawkish stance continuing and prospects of earnings not so great. Dow and Nasdaq are now on track to notch their longest annual percentage losses in 2008. Yields have inched up after finding good support at 3.45 for 10-year and profit-taking by longs before the markets get even thinner. And UK's plans to start selling back assets from January and upping its and also market upping its terminal rate of ECB are not really helping the risk sentiment. In fact, one of the ECB members, Windows, said that ECB will raise rates until projections show that unprecedented euro area price gains are headed back to 2% and hinted at 0.5% in January. So dollar has been hovering in the lower ranges. Of course, today it has slipped more, particularly because of the movement seen in the Dalian. But then we come to the enigma called rupee. And rupee, we all know, has weakened almost entire year, barring November, where it had some, gains, but that gains were only shown on the chart for a very brief period. But you can say almost the whole year rupee has weakened. And will the norms that apply to other currencies apply to rupee, that investors start to unwind some of their long positions and long positions in the dollar and buy back the rupee? I mean, it's still not clear. We are still trading less than a percentage from the all-time historical high of 83.26. And yes, there have been some positive developments. Trade data showed some improvement. Forward premiums have inched up more than 2% for 1 year from a low of 1.6%. And we also had some inflows being talked about, maybe related to the year end. Definitely the inflation coming down for 2 successive months is another positive, but we still keep our fingers crossed whether really rupee performs in the last 2 weeks of December. Thank you very much.
Okay, wonderful, JK. And folks, yes, it's been quite an active morning today. The Asian markets have been reacting to the revision of the YCC band by the BOJ, which has led to an increase in yen strength. A long overdue reaction by the BOJ for the rising inflation. And for that, I really like the statement, JK, you mentioned. As the political stakes rise, the resistance to change subdues. And that's what's we are seeing with the Japanese markets. On the other side, yes, there has been a persistent high cost of living and erratic energy prices in the European nations, and that continues to be a concerning factor, even though we have a hawkish central bank, which is quite keen on curbing the inflation to 2% target, as mentioned by the VP. On the other side, we have also had updates on the geopolitical front, which has led to some weakness on the Russian ruble. As mentioned, for the 6-7 months, it has been trading at much better levels, and right now we are seeing it trade at 67.7 or higher against the dollar. On the domestic front, as JK mentioned, there has been some positive updates, while some flows are also expected. So it remains to be seen how does rupee perform, as it has been a bit on the uncorrelated side for the rest of the currencies. We'll come back again with how rupee performs and another round of updates for you. Till then, we say goodbye and thank you so much for listening.